for the very first time, the S&P 500 managed to breach the 6,800 psychological mark. However, it failed to close above the 6,800 psychological mark and closed at 6791.69. But there were two most important aspects of the candle formed on Friday, on 24th of October. The first one was that the open price of the candle was above the previous all-time high level of the S&P 500. The second aspect was that it breached the 6,800 psychological mark for the very first time. And the third one was that the S&P 500 managed to sustain in the open equal to low condition on Friday. Now, all of these three things are indicating more bullishness, more bullish movement in the S&P 500. However, this bullishness will be, initially it will be restricted. Why it will be restricted? Because the S&P 500 is going to encounter a very strong resistance in the 6,800 range. And it's not just about the S&P 500, but also at the same time the Dow Jones and the Nasdaq. And if all goes well, then all of these three indices will hit this heavy resistance zone on the same day, either on Monday or Tuesday, or it is expected to happen any day, anytime before Wednesday, 2 p.m. Eastern Time. Now the next question is that when the S&P 500, Dow Jones and Nasdaq encounters this heavy resistance zone, then what will happen? In that case, there will be struggle and then eventually a fall. And this is exactly what I mentioned in the final update yesterday to my Patreon community members. And all of this came into the picture because in this, the midday update yesterday to my Patreon community members on Friday, I mentioned that the S&P 500 Dow Jones are holding in the open equal to low condition. Okay? So it was very much clear that for the entire day, the S&P 500 will trade in between the open price that was 6772.07 and the resistance level that was 681x. Now the next question, that why the open was so significant for the S&P 500. So if you have watched the previous S&P 500 weekly technical analysis, then in that I mentioned that S&P 500 will keep on trading in between the high and low of this candle, or the all-time high and the low of this candle, no matter what, until and unless for some reason, maybe a news, earnings or something, for some reason there comes a very heavy breakout either in the bull side or in the bearish side. And if you notice, S&P 500 sustained, and it was very much clear it is going to sustain bullish from Monday onwards. And this was my midday update on Monday, and I mentioned that it is going to sustain, okay, bullish in this manner because of the open equal to low condition is strong bullishness, and the same was mentioned in the first update. However, Wednesday was very interesting because the S&P 500 gave up heavily intraday and tested the 666x, 664x zone. But we knew that no matter what, S&P 500 will sustain at the zone. And what triggered that fall on Wednesday, that heavy fall? That was actually the third hourly closing. That was below 6,700 psychological mark at 6698.45. Now that the movement is clear, S&P 500 is going to move up. It is expected to hit the heavy resistance zone. At the same time, the Dow Jones will hit, the Nasdaq will hit their respective heavy resistance zones. So what will be this resistance zone? Okay, and when we are expecting it to hit the resistance zone, or if there will be a fall before hitting the resistance zone, okay, to what level? So this bullish and bearish movement, each and everything I am going to discuss in detail in this, the S&P 500 weekly technical analysis, which is for the week of October 27th, means from October 27th, which is Monday, to October 31st, that will be Friday. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates of the S&P 500, Dow Jones in a manner to the entire US stock market every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, let me tell you that I have divided this S&P 500 weekly technical analysis in two parts. In the first part, I will discuss the technicals, the technical indicators, the candles, the patterns, okay, all of these. And then I will tell you that how much the S&P 500 is bullish or bearish, and if the key technical indicators are bullish or bearish, and if there will be a surprise fall or surprise bullish movement also. In the second part, I will give you the probable movement. Probable movement means what is expected to happen in the S&P 500 or in the entire market in the next week. Just like in the previous week, I mentioned that it will remain in between these two no matter what. Okay, and this will be the tiebreaker in between these two, bullish side, bearish side. Only when there comes a breakout condition, a breach and a closing, okay, above or below, there will be the movement. Otherwise, it will oscillate in this manner. So all of this, the probable movement, I will discuss in the second part. So now guys, I'm going to start, I'm going to begin with the first part, and here I will discuss the weekly and the daily charts. So guys, now this is the weekly chart. First I will discuss the weekly chart, then I will discuss the daily chart. Okay, so weekly chart means one candle represents 1 week, not 1 day or 1 hour. And the weekly chart is the trend setter. Okay, that what is that trend, the long-term trend, whether it is bullish or bearish, and that is derived through the weekly chart. Okay, so now let's first discuss the weekly candle. Okay, the closing is above the previous all-time high or above all of these the candles. Okay, although the closing is not equal to the current all-time high, that was 6807.11. okay, it is not that equal to, but still there is a very heavy bullish candle indicating heavy bullishness. Now this heavy bullishness means that on Monday, irrespective of any open, there will be an initial or intraday bullish movement. There may happen a gap up open on Monday, okay, but because the closing was not above the 6800, it was still struggling and closing was below the 6800. That is why, okay, chances of gap up open are there, but not heavy or not much. However, irrespective of any open, there will be an initial or intraday bullish movement on Monday. Now this is the last weekly candle of the Dow Jones. This candle is very special for the Dow Jones. Why? Because this is the weekly candle and it is in the open equal to low condition. Means since Monday, the Dow Jones never gave up the open price. It was in the open equal to low condition, and the Dow Jones also closed above all of these the candles, though the Dow Jones, the closing price was not equal to the all-time high. Okay, but because of these the conditions, there will be a gap up open on Monday, or irrespective of any open and initial or intraday bullish movement on Monday. And if all goes well, then the next candle, next weekly candle will be a green candle. Okay, if not a green candle, then a limited bearish candle. Okay, well, it will be more clear and confirmed on Wednesday when the FOMC event is over. Okay, otherwise technically, okay, this is what should happen. Okay, so now we have seen, so it is now confirmed that on Monday, irrespective of any open, there will be an initial or intraday bullish movement, and there are chances that there may happen a gap up open on Monday. Okay, now let's analyze the technical indicators. So in terms of the technical indicators, the S&P 500 is bullish through the moving averages on the weekly chart, bullish through the Bollinger Bands on the weekly chart, bullish through the Ichimoku cloud on the weekly chart, and the most important technical indicators are the MACD. S&P 500 is bullish through the MACD on the weekly chart. Okay, there is a kind of slip. You can see it was coming down, then it moved up. Okay, so well, it's a good sign for the bulls. And the S&P 500 is bearish through the stochastic RSI on the weekly chart. But now if the movement is green, okay, movement is positive, it remains green Monday and Monday onwards, or limited bearish. Limited bearish means the fall is not below the previous all-time high. Okay, then in that case, there are very good chances that the stochastic RSI on the weekly chart of the S&P 500 may also turn bullish. Okay, now the S&P 500 is neither saturated nor overbought. However, If the S&P 500 gives a good green candle, then the next week S&P 500 will hit the saturation and the overbought condition. Okay, and when that happens, then immediately the S&P 500 will come into the technical condition, technical pressure to give up. Okay, so this will be very much clear on Monday itself. If there will be a little more green movement, then it will be confirmed that how much saturation is there. So well, in this manner, the S&P 500 is still in the long-term bullish trend, and S&P 500 is 80% bullish on the weekly chart. Okay, now let's confirm the same through the Dow Jones, the chart of the Dow Jones. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you want to get these daily precise updates of the S&P 500, Dow Jones in a manner to the entire US stock market every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now, in case of the Dow Jones, everything is almost same as was seen in the S&P 500 technically. Okay, it is bullish through the moving averages, Bollinger Bands, and the Ichimoku cloud on the weekly chart. And the Dow Jones is, yes, exactly the same condition in the MACD and the stochastic RSI. Okay, the only change, yes, it is expected to hit the saturation if there comes more bullish movement. The only change here in the Dow Jones is that it is trading at the overbought levels or in the overbought condition. In the previous S&P 500 weekly technical analysis, I mentioned the Dow Jones is still trading in the overbought condition, and that will be the only case because of which the entire market will remain under pressure. And it was the entire US stock market was trading under pressure until Thursday. Okay, it was only Friday when the favorable CPI inflation data was released, and because of that data there was very heavy bullish movement. Okay, otherwise the market was supposed to remain in this manner, just up down up down. So this means that even though the Dow Jones is also 80% bullish, on the weekly chart, but any more bullishness or the continuous bullishness in the Dow Jones will create a problem, not just for the Dow Jones itself, but for the entire US stock market, because this the continuous bullish movement in the Dow Jones on the weekly chart in the overbought levels, in the overbought condition. Okay, this means that technicals will trigger a fall. Okay, and now this is also in line with the expected movement, wherein we are expecting a heavy resistance, means we are expecting a struggle at the heavy resistance zone in the Dow Jones, in the Nasdaq, and in the S&P 500. Okay, so bullishness is allowed, no problem, but a limited bullishness is allowed in the S&P 500 and also in the Dow Jones. Okay, so this means that overall the long-term trend is still bullish, no problem with that. Okay, so how this bullishness, long-term bullishness, will handle the pressure, will handle the fall? Well, let me first cover the daily chart, then I will tell you that how this long-term bullishness will help the entire market to hold and not to give heavily. So this is the daily chart of the S&P 500, and earlier there was some confusion, okay, about the bullishness and bearishness, because there was also the neutral trend. Okay, but now everything is clear. Everything is clear in a manner that the S&P 500 is technically sound. See, first of all, if you notice the candle, the daily candle, okay, the open was above the previous all-time high, was into the open equal to low condition, breached the 6,800, but closed below the 6,800, but still it is heavily bullish, indicating an initial or intraday bullishness on Monday. Okay, and also there are some chances of a gap up open on Monday, right? And if you notice, this is the last candle of the Dow Jones. Okay, though the candle, the open was not above the all-time high, but still it was in the open equal to low condition, and then the closing was above previous all-time high. Okay, and also it made an all-time high at 47,326.73. Okay, it is also indicating an initial or intraday bullishness, and there are some chances of gap up open on Monday. So exactly the same we have seen on the daily chart, or sorry, on the weekly chart. This means that on Monday now there will be an initial or intraday bullish movement. This can extend to Tuesday also. Okay, and also some chances of the gap up open, right? Technically, the S&P 500 is good because it is bullish through the technicals, through the Chimoku cloud and Bollinger Band and the moving averages on the daily chart. And the biggest change is in the MACD because of this heavy bullish candle. Okay, the MACD of the S&P 500 has changed to bullish. This is the biggest relief to the S&P 500, and the same was seen in the stochastic RSI of the S&P 500 on the daily chart. Now the stochastic RSI on the daily chart is also bullish. Okay, so on the daily chart now S&P 500 is heavily bullish, or is 100% absolute bullish on the daily chart. Okay, it is neither saturated nor overbought, but if there comes one more green candle or two back-to-back green candles, then we can expect this bullishness or more bullishness in the S&P 500. Okay, sorry, bullishness means the saturation, means it will hit the saturation, okay, on the daily charts. And if you notice that this is the Dow Jones, in case of the Dow Jones, exactly the same is there through the technicals. The Dow Jones is bullish through the Ichimoku cloud, through the Bollinger Bands, through the moving averages on the daily chart. Then the Dow Jones is yes, MACD. MACD of the Dow Jones is also bullish. Stochastic RSI of the Dow Jones is also bullish. Okay, neither overbought nor saturated, but again the same problem. So as Dow Jones is also 100% absolute bullish on the daily chart, but any more bullish movement, continuous bullish movement, will trigger heavy saturation and also the overbought condition. And once the overbought condition is seen in the Dow Jones on the daily chart, then it will support, means then it will coincide with the overbought condition on the weekly chart. Weekly chart overbought, daily chart overbought means a fall or a good fall, like around 2% fall we can expect, 1.5 to 2% fall. This fall will be there in the entire market. Now this again coincides with the expected this heavy resistance zone of the Dow Jones, the Nasdaq and the S&P 500. Okay, because for a perfect fall to happen, the market must move up. The S&P 500, Dow Jones, Nasdaq must move up, and then it should hit. Okay, means there will be a green movement. The bullish movement. It will hit the heavy resistance zone. All of these three indices will struggle. Okay, and then the overbought conditions will trigger the fall. But guys, whatever is going to happen or whatever will happen, I will keep you posted. I will keep you updated through these daily precise updates of the S&P 500, Dow Jones and the Nasdaq, or in a manner to the entire US stock market, which I give to my Patreon community members every day from Monday through Friday. Every day, pre-market analysis, first update, midday update, final update. And that's not all, because I also give the opportunities in the premium stocks or the premium ETFs of the US stock market. Okay, 50 to 80 premium opportunities in the stocks, in the premium stocks and the ETFs, and the success rate is more than 80 to 85%. This is the success rate in these the premium opportunities, because everything is explicitly mentioned. And that's not all, because I also give the S&P 500 midweek update. It is a video technical analysis generally posted every Wednesday or Thursday, and here I discuss all of these are bullish, bearish conditions, okay, with the exact numbers, exact levels, exact zones, okay, the movement, that to what level it will move up, then come down, okay, all of these precisely every Wednesday or Thursday. So this is the midweek update. So guys, whenever you want to get these, the daily precise updates of the S&P 500, Dow Jones, Nasdaq, in a manner to the entire US stock market every day from Monday through Friday, as well as the stock market opportunities in the premium stocks and premium ETFs, where the success rate is more than 80 to 85%, and also the midweek update, the video technical analysis, then in order to get all of these, you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And guys, when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here you will see this button or this tab that says membership options. And when you click on this button or tab that says membership options, then you will see that there are these three levels or these the three tiers. So when you subscribe to this tier, then you will be getting daily SP500 precise updates, levels, movement, and all midweek update videos. When you subscribe to this level or this tier, which is S&P 500 updates and premium opportunities, then you will be getting the S&P 500 precise updates, levels, movement, all midweek update videos, and the premium opportunities in the stocks and ETFs every month, 50 to 80 opportunities wherein the success rate is more than 80 to 85% and everything is explicitly mentioned. This is level 3, tier 3, and this is a special level. So when you subscribe to this level, this tier, then you will be getting all of this, whatever you are going to get here in these the two tiers, and along with that there will be a one Zoom video meeting, one Zoom video meeting. And in this video meeting I will share with you, I will teach you, I will tell you all of these the strategies, hacks, and these and the calculator and a lot more. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates, midweek update, a video, technical analysis, and the premium opportunities in the stocks, 50 to 80 opportunities every month where the success rate is more than 80 to 85%. So guys, whenever you want to get all of these, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the second part of the S&P 500 weekly technical analysis, and here I will give you the probable movement. Probable movement means what is expected to happen in the S&P 500, in the Dow Jones, in the Nasdaq, and in a manner to the entire US stock market in the next week, the week of October 27th. So now, first thing first, the most important event of the next week is Wednesday. Wednesday at 2 p.m. Eastern Time, the FOMC decision will be known. This time there will be no SEPs. Okay. Then at 2:30 p.m. Eastern Time, the press conference of the Federal Reserve Chairman. This will be the most important event of the next week of this the month. This means that the market, the entire US stock market will remain heavily volatile. Heavily volatile. You will see sudden ups, downs or so. Okay. Now to make the matter worse or to add more volatility, on Wednesday after market hours, Microsoft, Meta, Google, these the giants will post the earnings after market hours on Wednesday. So the volatile market will be more volatile, and the impact of the earnings will be felt on Thursday morning. There will be either a heavy gap up open or heavy gap down open. Okay, on Thursday. Now this volatility will further be extended to Friday, because on Thursday after market hours, Apple and Amazon, these two giants will post the earnings. Okay, and the impact of these earnings will be felt on Friday. And Friday, the PCE data was supposed to be released, but because of the government shutdown, it is not expected to be released. Okay, however, if just like the inflation data, if the government decides to release this data, then this data will be released. This means that along with the earnings, the data will be there, and there will be extremely very heavy volatility in the market. Because of this very heavy volatility, you will see sudden ups, sudden downs. Okay, one day you will see gap up, next day you may see a gap up or a heavy gap down. Then some other day means the market will be suitable for the intraday trading. Okay, not for the long term or so. Okay, but through the numbers and the zones, the levels, okay, we can actually trade the market without any problem or any fear. Now, so in terms of the numbers, okay, so let's talk about the numbers. So in the beginning of this the video, the technical analysis video, I mentioned that there is a resistance zone. Okay, this resistance zone starts from 683x, okay, and goes to 684x. This is that resistance zone 683x, 684x. Okay, this is very heavy. Okay, similarly there is a heavy resistance zone in the Dow Jones, okay, and in the Nasdaq. Okay, all of these are three indices, but here I am talking about the S&P 500. For the Dow Jones and the Nasdaq, that I will mention in the pre-market analysis on Monday, okay, to my Patreon committee members. So now all of these three indices are expected to hit the zone as early as on Monday. Okay, but there will be a condition. Okay, if that condition is not fulfilled, then the indices will not hit the zone. And the condition is simple. The condition says that the S&P 500 must open, it must open above the open price of this candle. Okay, or irrespective of any open, it must sustain above the open price of this candle. What was the open price of this candle? 6772.07. The S&P 500 must hold and sustain above the open price of this candle, right? Now, what happens if there will be a breach? If there will be a breach, then the test or the movement to the zone will be delayed by a few hours or for a day or so. It will be delayed, okay, or it will be deferred, because when it happens, there comes a breach. This means that it is now invoking the bearish side. Okay, but in a condition where in the open of the S&P 500, okay, or the movement, the initial or intraday movement is above this price 6772.07 and there comes no breach, then this is the case of bullishness. Okay, and in this the case, the S&P 500, Dow Jones, Nasdaq. Okay, now this should happen in the S&P 500 as well as in the Dow Jones. In the Nasdaq, it may or may not happen. We are not concerned about the Nasdaq because Nasdaq follows the S&P 500 and the Dow Jones. Okay, so primarily these two. If this happens in either of these two, either in the S&P 500 or the Dow Jones, then also this condition will be accepted. Means the bullishness will be accepted if it happens in the Dow Jones or in the S&P 500. If it is seen in both of these cases, means heavy bullishness, very heavy bullishness, and this means that on Monday itself the entire market and all of the indices can hit their respective these zones. Now there is a little tweak here, okay, and well, that comes in the form of, see, all of these three indices, S&P 500, Dow Jones and Nasdaq, are interrelated, are interconnected. Okay, this means that now we have the resistance zone in all of these three, okay, S&P 500, Dow Jones and Nasdaq. So if the chances are heavy in case of the Nasdaq that when the S&P 500 is seen moving to or struggling here, okay, or moving to or struggling here in the Dow Jones and the S&P 500, then Nasdaq may breach the resistance zone a little. Okay, now but the Dow Jones and S&P 500 must not breach and must not sustain above, must not close above these are respective resistance zones. Why these indices must not do that? Because if the S&P 500 shows bullishness and try to move past this zone 683x, 684x, if it try to move above this zone and moves to the 685x, 6x or 687x, okay, then the fall, whenever it happens, will not be limited to the 672x or 6700, rather it will be to the 6600 range. So this means that for a limited fall to happen, limited fall means to the 6700 range, okay, the S&P 500 must not breach and must not sustain above this zone. However, because of this, the connection between the Dow Jones and the S&P 500, if one of these indices, either the Dow Jones or the S&P 500, breaches a little, but the other index is holding, is struggling in that the defined zone, then also this condition will be acceptable and will be there that the fall will be limited. But if both of the indices move above their respective, there is the resistance zones, okay, and even closes above the respective zones, then the fall will be to the 6,600 range in the S&P 500. In the Dow Jones, this will be different. In the Nasdaq, this will be very much different, because Nasdaq will be the one that will lose heavily, okay, more than the S&P 500 or the Dow Jones. Okay, so this means that bullishness or the bullish side in the S&P 500, okay, for now will be limited to the restricted to the 6,800 range. Okay, this is the best case scenario for the S&P 500. Okay, now considering that the FOMC event is there in the next week, okay, there may or may not be a rate cut, though the market is expecting a rate cut, but let's not speculate. Even if there comes a rate cut, then also, okay, this is the range. Then the earnings of the giants, Meta, Microsoft, Apple, Amazon, Google, the giants, okay, it is there in the next week. Then also it is expected to remain in the 6,800 range. Okay, the best case, the best possible scenario, the best case that may happen here is that the S&P 500 may sustain above, because of the FOMC event or the earnings, may sustain above the 6,800, this particular, this heavy resistance zone. Okay, but then what will happen? Okay, so we must not forget that the Dow Jones is already trading in the overbought condition on the weekly chart. Any more bullish movement even on the daily chart will trigger that the overbought condition on the daily chart in the Dow Jones will also hit the saturation and overbought condition in the S&P 500. This means that the zone itself is heavy, okay, in all of these three indices. Then comes the technicals. Okay, so more and continuous bullish movement even in the best case will make the entire US stock market unstable in a manner that it will come down under its own weight, okay, because of these conditions, right? So this, the bullishness part is clear. Now the bearish part. So the bearish part, but guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And you can join my Patreon community in order to get all of these, the daily precise updates of the S&P 500, Dow Jones every day from Monday through Friday. And I've given the link in the description of the video and also in the comment section. The bearish part will happen if the open, yes, there is one more condition that may look like bearish but will be actually bullish. If for some reason, for geopolitical or for some reason, there comes a gap down open. Okay, gap down open means the open is below the open price of this candle. Okay, open is below the open price of this candle, but the S&P 500 moves up after open, immediately after open, and forms an open equal to low condition, or the Dow Jones forms this, the open equal to low condition, either both of the indices or any of these, the two indices. Okay, if the open equal to low condition is seen, bullishness, just bullishness, no bearishness, even though there will be a gap down open. Okay, and I'm considering, because there is a weekend, Saturday, Sunday, the weekend. Okay, and anything can happen, like the geopolitical situation, okay, like China, Canada, US, okay, trade war, or there are a lot of factors. Okay, so I'm considering a worst case scenario. However, if this condition is not seen or is not fulfilled, then all of the other conditions will be bearish conditions. Okay, now bearish conditions means that a breach of the open price of this candle, that it was 6772.07, a breach of the open price of this candle, and to add more bearishness, at least 1 hourly closing below the open price of this candle makes it bearish in a manner that it will be coming down to test the previous all-time high, that was 6764.58. and when it comes down to this, then there is a theory. Okay, it is non-technical theory, it is the gap fill theory. Now the closing price of Thursday candle was 6738. 6738.44. Okay, so the retail traders will then think that it has come down to this level, means it is coming down to fill the gap, okay, to the 6738.44. And when it comes down, then it's not about the all-time high or the this, then comes my level in the 674x, this level, because if the fall happens below 6764.58 but up to the 674x, then the gap will not be filled. It may or may not be filled. Okay, there is no confirmation, because then 674x will handle that fall and will throw it back in the bull side. So while the retail traders, other traders might be thinking, okay, it is coming down, it will come down to this level. No, okay, it will not fulfill this the gap, or it will not fill the gap. Rather, it will simply turn from here from 674x to the bullish side. Okay, only when it loses the 674x, at least on the hourly closing basis, at least 1 hourly closing basis. Okay, though in this case we will be needing two consecutive hourly closing to confirm. Okay, when that happens, then it will not be just coming down to the 6738.44. Rather, it will be coming down to the 672x, the heavy support. Okay, it will breach this, the closing price, it will be coming down to the 672x. Okay, so in this manner, the 674x, the 672x, these are two different levels, two very heavy levels, and the gap fill, okay, it will depend on these two, or especially the 674x. Okay, now if the S&P 500 does not test, does not hit this, the resistance side, okay, zone, the same goes to the Dow Jones also, rather it initially triggers the bearishness. Okay, then in that case the theory will remain same, that the fall will be limited to the 6700 range. Okay, not to the 6600 range, because technically the bullishness is there, renewed bullish, new bullish sentiments are there. Okay, so chances will remain little, okay, or below normal, that the S&P 500 can lose to the 6600, because Monday and Tuesday are blank, these 2 days are blank, and S&P 500 has nothing. Okay, or the US stock market has does not have the condition that can trigger the bearishness. Okay, unless there comes a news, the geopolitical news, otherwise everything is good, everything is fine. Okay, so otherwise 6700 range. But if this condition happens, or if this is seen that the S&P 500 has tested this particular range, okay, struggled and failed, then also it will be limited to the 6700 range, to the 672x, okay, or maximum to the 6700. But if it breaches, somehow sustains, okay, above this range, then it will have to come down, and then there is no guarantee that the 6700 or 672x will be able to handle the fall. Rather, there will be more fall to the 6600 range. Now, when it comes down to the 6600, then what will handle the fall? Okay, exactly the same range, the same zone that was there, that has handled this fall. What was that? 666x, 664x. This heavy support zone, this heavy support range will be there. This zone, okay, yes, one more thing. In this, the present case, this zone will also define the correction or the short-term bearish trend in the S&P 500. Because when it comes down to this, the zone, this means that the S&P 500 has lost like 2%, more than 2%, okay, in this case, or 2.5%. And when the S&P 500 loses this, the zone on the daily closing basis, in that case, what will happen? In that case, a short-term bearish trend, a short-term bearish movement, short-term bearish trend, okay, that may or may not convert into the correction, but that will be a different thing. But a short-term means around 5% fall we will be expecting in this case. Okay, in this, the bearish case. This means that bearishness is tricky. Okay, bearishness can happen. There are certain conditions that must be fulfilled for the bearishness. But as long as the bullishness, see, for the bullishness, only 1 or 2 conditions are there. That's it, not more than that. Okay, But again, the bullishness is restricted. Even in the best case, the 6,800 range will be there. Okay, if all goes well, then also the 6,800 range, it will hit the saturation, it will hit the overbought conditions. Okay, and then that will trigger the fall in the market. Okay, so bullish side is limited, restricted, but the bearish side is not. Bearish side is open to the 6,600 range. However, whether it is going bullish, okay, or to what levels it can go bullish or bearish, this will be very much clear on Monday. So in Monday, okay, in the midday update or in the final update, okay, I will mention, okay, what we are expecting until Wednesday, whether the fall will be after Wednesday or before Wednesday, or if there will not be any fall until Friday. Okay, Friday will be very interesting. Okay, so that I will discuss in the midweek update video technical analysis on Wednesday. So guys, hit like if you have liked this video in order to appreciate, and your appreciation matters a lot. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you have any question that you want to ask, then please feel free to ask your question through the comment section.